Bitcoin's price may not be telling the whole story. Beneath the surface, stablecoin growth, derivatives data, and long-term holder behavior are revealing signals that could shape the next major move. The real question is whether these hidden indicators are quietly laying the foundation for Bitcoin's next bull run before the broader market notices.
Thursday, July 2nd, we're up 56% and Bitcoin's down 40%. So that's 100 percentage points of outperformance. And we did that by underweighting DATs and exchanges and overweighting miners because the valuation arbitrage between what they earn from selling Bitcoin versus what they can earn from pivoting that data center capacity to serve the AI market. It was.
For years, Bitcoin miners had one job. Today, they're chasing something far more profitable, and it could reshape the entire crypto industry. What if Bitcoin's biggest opportunity isn't Bitcoin itself? That's exactly the shift unfolding beneath the surface of the crypto market. While many investors remain focused on BTC's price decline, a far bigger story is quietly reshaping the industry's future. According to Matthew Sigel, the real value now lies in Bitcoin miners. These companies are no longer just securing the blockchain. They're transforming into AI infrastructure providers. Their power-hungry data centers, once dedicated to mining Bitcoin, are becoming some of the most valuable assets in a race to build artificial intelligence. That shift creates an entirely new source of revenue, one that could outperform traditional mining economics by a wide margin. But there's a catch. As miners redirect computing power toward AI, Bitcoin's network is beginning to feel the impact. The hash rate has weakened, suggesting fewer publicly listed miners are committed exclusively to securing the network. Although countries like Ethiopia and Kazakhstan are expanding mining operations, they still haven't replaced the capacity that's leaving. This creates a fascinating crossroads for crypto. The companies once viewed as pure Bitcoin plays are evolving into diversified infrastructure businesses with exposure to two of the world's fastest-growing industries. If this trend continues, Bitcoin's next bull market may be driven not just by the coin itself, but by the companies building the future around it. Do you think Bitcoin miners are making the right move by pivoting to AI, or could it weaken Bitcoin's future? Let everyone know in the comments below. If you enjoyed this analysis, don't forget to like, share, and subscribe for more deep dives into the biggest stories shaping the future of crypto and finance.
So, we launched last May, and through, Thursday, July 2nd, we're up 56% and Bitcoin's down 40%. So that's 100 percentage points of outperformance. And we did that by underweighting DATs and exchanges and overweighting miners because the valuation arbitrage between what they earn from selling Bitcoin versus what they can earn from pivoting that data center capacity to serve the AI market. It was really extreme. It's still quite pronounced, and we haven't brought down that exposure a great deal. Part of the reason is I feel increasingly confident that a number of these companies are going to be able to convert to REITs over the next couple of years, and that should bring down the volatility even more. The credit markets continue to fund kind of GPU purchases directly. It's really bringing down the cost of capital for these names. And then on the supply side, bringing on new power continues to be challenging in the US. And after 2 decades of not investing in, or more even, of not investing in power infrastructure because the world was globalizing, now it's deglobalizing. You can't store your sovereign AI data in another country, so everyone has to duplicate the capacity after a couple decades of under. A number of them will go offline as Bitcoin miners. They may keep a small piece because for now, look, our fund is pretty small, but if these names exit Bitcoin mining completely, then I would have a harder time owning them. So that would be a negative. So they may keep some just to have the optionality. It makes the hash rate of the pure plays even more attractive to the extent that Bitcoin can stage a recovery. So like in the last downdraft, when BTC hit 58, we didn't add to spot Bitcoin, but we did add to like Bitdeer and Mara, and those are two names that are relatively pure play on the bit mining side. They're trying to pivot to AI, but Bitdeer is completely vertically integrated now, from the chips to the mining machines to the data centers, and so their margins could see enormous tailwinds if Bitcoin recovers. So I feel like there's enough exposure to the coin via the pure play miners, but you raised the kind of the existential question: if everyone leaves, then what's left? And one thing we noticed is that this decline in the hash rate, the Bitcoin hash rate's down year to date. It's actually the longest time that it's fallen but without making a new high, and some of that is definitely reflecting the listed miners leaving. And our thesis, or my thesis, has been that sovereigns would pick up the slack, and some of that's happening: Ethiopia, Kenya, Kazakhstan, but not big enough to make up for the overall hash rate decline. And that's a major question mark, I think, for Bitcoin. 2017, 2021, Bitcoin ASICs were double-digit percentage of their business. It's now very, very small because the ASICs market's been so weak, but Global Unichip is now designing AI chips for Tesla, for Google, and the stocks tripled here over the last year. So it's a great example of how Bitcoin and AI, they don't just share the electricity. There's a common supply chain, and for those suppliers that are able to serve both markets, a lot of optionality. So Global Unichip is an example. Raspberry Pi, that's been another one of our winners this year. They make the cheap computers that people use to mine Ethereum, and started out as a toy, just like NVIDIA chips started out as a toy. Now 80% of their sales are to enterprise, and those enterprises are using Raspberry Pis to perform basic inference at the edge.
What if Bitcoin's next explosive move has already begun, but the biggest clues aren't on the price chart? Stay with us, because the signal smart money is watching to completely change how you see the crypto market. As the crypto market searches for direction, the conversation is shifting beyond Bitcoin's daily price swings. Lower interest rates are often viewed as a headwind for stablecoin issuers like Circle because reserve income declines. But does that tell the whole story? Not necessarily. Stronger economic activity, expanding on-chain wealth, and growing stablecoin adoption could offset weaker yields, suggesting that crypto fundamentals may be stronger than they first appear. At the same time, Bitcoin investment strategies are becoming increasingly selective. Instead of chasing every market dip, the focus has shifted toward identifying periods of true capitulation. During Bitcoin's first drop toward $60,000, derivatives markets flashed extreme fear before prices rebounded sharply. This time, however, those panic signals haven't fully appeared. Put options remain expensive, but not at the levels typically associated with market bottoms. Perhaps the most encouraging development is happening behind the scenes. Long-term Bitcoin holders are slowing their selling, while realized losses suggest weaker hands may already be exiting the market. Could this be the early stage of seller exhaustion before the next major move? The answer may determine where Bitcoin heads next.
When rates are coming down, but usually when rates are coming down, it means animal spirits are elevated and business activity is strong, and maybe Bitcoin's working and on-chain wealth's being created, stablecoin AUM is growing. So I don't fully buy into that, like low rates are bad for Circle. I think there's kind of more going on. It's a reasonably high quality of earnings, but my comment on the pricing pressure, and I agree with you that OUSD is at least saying that they're going to return essentially all the float to the ecosystem, but I still kind of land on who's the business exec who's going to drive that. Like a lot of these 140 companies have other ways that they can earn float. Maybe it's going to be other business lines competing. Exactly. Every new stablecoin that launches needs to be interoperable with USDC. You could argue you can argue it's good for everyone.
What about the Coinbase side? It seems like they're involved in both.
We'll see. They are due to either extend or eliminate the partnership with Circle this year. I think that Coinbase makes a lot of money off that partnership. It's instrumental to the base development. Uh, there's a lot of things going on with Coinbase at the moment as they try to pivot from being an altcoin play to having their fingers in like every part of the financial business, and there's a lot more competition in prediction markets and perps. So stock's down a lot. That's another one where we've been underweight these exchanges and brokers relative to Bitcoin miners, where the valuation I think is cleaner and the story's been more straightforward.
Yeah.
We respect the 4-year cycle, and it's been one element in kind of not buying every dip in Bitcoin this year. And that's one of the reasons why Node at least is up 20%, Bitcoin's down 20 or 30%. We not to say we didn't buy some of these dips. The first time that Bitcoin hit 60K, we noticed some really one-sided positioning in the derivatives market. And then we got the bounce into the low 80s, ran right into the moving averages. And on this retest, there hasn't quite been the same type of capitulation signals in terms of liquidations or the premiums that people are paying for puts versus calls, and I think that the market noticed that, and while there was definitely a lot of bearishness, we didn't see that same type of capitulation. That said, puts are still really expensive versus calls by historical standards. We're seeing that like in the 80th percentile. So it not quite the 99th like we saw, the first time BTC hit 60K, but puts are expensive. Realized losses are in the 90th percentile historically. So people are dumping losses. So, there is maybe some hint of sellers exhaustion that may emerge here. And then we've also seen the older cohorts, kind of 2-year plus holders, have slowed down their selling. So that's another maybe.
So what's Bitcoin really telling the market right now? Is this just another correction, or is something much bigger unfolding beneath the surface? While most investors remain fixated on daily price swings, the real signals are coming from somewhere else. Stablecoin adoption continues to grow, long-term holders are slowing their selling, and derivatives markets are showing fear, but not the kind of panic that has historically marked major bottoms. Could that mean the strongest hands are quietly taking control while emotional traders head for the exit? That's the question worth watching. Crypto history has repeatedly shown that the biggest rallies often begin when sentiment is still overwhelmingly negative. If these on-chain and market indicators continue to strengthen, today's uncertainty could become tomorrow's opportunity. The next breakout may not announce itself with headlines. It could already be taking shape while the majority of the market is looking in the wrong direction. Will you recognize it before everyone else does? Now the question is yours. Do you believe Bitcoin is quietly preparing for its next major breakout, or is another wave of selling still ahead? Share your prediction in the comments below. If you found this analysis valuable, don't forget to like, share, and subscribe for more in-depth crypto insights. Your support helps bring you the latest Bitcoin and blockchain analysis before the rest of the market catches on.